Hi, good week to all. Welcome to this week latest edition of the weekly technical outlook on the major stock indices, where I'll be covering the key trend levels or the trend bias, pardon me, and the key technical levels on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 40 indexes for the week of 4th of October to 8th of October 2021. So before we start, let's take a look at the disclaimer slides. Okay, so let us start with the raw performance or the raw momentum analysis, where I just take the weekly performance on the various benchmark indices across the globe, and I compare it with their 4 week average, the prior 4 week average, and as well as prior performance. Okay, for the sake of analysis. So if you look at for the week of last week, where we actually it actually kind of play out with our expectation, where actually we are expecting a kind of a negative performance on the almost all on the major stock indices on the US stock indices. So we could see that the SPX 500 and the Nasdaq 100 actually tumbled. Okay, so this particular set of weekly returns for the S&P 500 and the Nasdaq 100 was actually the weakest since 6 to 5 months. You know. Six to 5 months in terms of performance, the weakest weekly return. So negative 2.2%, negative 3.5%. The Dow Jones average negative 1.36%. The Russell 2000 slightly lower at negative 0.29%. So the worst hit was the Nasdaq 100. This actually came in within our expectation, especially when we stated in our Q4 21 outlook, which I just concluded last Wednesday. We did highlight that do be cautious of this coming months as we stretch into the final stretch of 2021. We do expect this US Treasury yield, the 10 yield and even the 30 yield, will start to actually inch up and resume their potential medium-term uptrend that has kind of a kick-started since March this year, where actually after that, around somewhere around in June to July or June and July, May, June, July, actually they took a breather. The last 2 weeks they actually start to inch up again. So that could actually starts to pressure high tech stocks, okay, where actually they are kind of a more richer in terms of valuation. The valuation tends to be higher. So with a higher interest rates, and given that we are now starts to see higher yield, pardon me, higher yield, and given that we are now at risk of this peak growth narrative, their earnings numbers could be hampered. Their earnings growth could be hampered, and which actually translate to a risk of a adjustment in this kind of we call it a higher valuation stocks, which is actually the high tech stocks, which is has the highest weightage inside Nasdaq 100. So that could actually explain their underperformance in last week, and it could actually persist in the next couple of weeks. Okay, so that's later I'll share with you the technical trend of Nasdaq 100. Okay, that if you look at its difference compared to the prior 4 week average, is so negative as well. It's also the worst among the US major indices. Okay, Nasdaq 100 at negative 3.35. Then going on to Hansing and Hansing Tech. So Hansing Tech last week was a kind of a kind of a breather rally or a kind of a consolidation after we see a prior week of steep decline, negative 2.92%, negative 5.53%. So all these are actually kind of a, to me, I look at the scenario is related to China. So China seems to be in the mode of a self deflating mode as kind of being engineered by their local government. Okay, why? Because if you look at since February this year, which is the peak of the China big tech stock. So during March to February, so pardon me, during start of this year, January to February this year, the China big tech actually outperformed the rest of the world. That is only that after February, the Chinese government starts to actually engineer this kind of clamp down on the China big tech, and it started to spread out all towards the rest of the private sector. So that actually kind of a it seems to me that it's not really kind of a best business approach. Rather, it's more of a self-engineered or self-deflating mode that the Chinese government wish to undertake. So why did they want to undertake this mode? There could be lots of reasons. Some of you may say that it's due to conspiracy, and some may actually start to say that hey, because they agreed that they do not want to see too much fraud in their local stock market, which the rest of the world is seeing. So what if suddenly the global stock market start to burst? as perhaps led by US, given that it's now close to 13 years plus of bull run since 2009. The negative if impact might be lesser that to be felt in the China market because they really start to deflate in the start of this year, which is down close to about 40 to 50%, depending on which index you look at related to the China market. All right, so that could actually explain their what I call persistence outperformance that has kind of keep on being intact since February this year. So last week was a kind of a breather rally. So I do not see a kind of a bottoming formation yet on the Hang Seng Index, the Hang Seng Tech Index. Perhaps maybe 1 to 2 weeks of maybe a bit of corrective rebound or a snapback rally to actually retrace their prior week of underperformance versus the rest of the world. So if you look at difference between the 4 week average, yeah, it's kind of positive on the Hang Seng Index. That the Hang Seng Tech Index were negative 0.4%. And do not forget that current environment in China right now, I would say China related, also kind of a bit negative as well due to this Evergrande debt crisis, as you all know, has still continued to play out into the marketplace. So yeah, there are much more outstanding due offshore and onshore bond that is coming up this week. And what's most interesting is those OPEC bonds that are not actually reported, publicly reported. So these OPEC bonds, right, could be actually the tip of the iceberg. So actually, I wrote about this OPEC bond, which actually due today. That's one of these bond. Actually, not really related to Evergrande, but it's more related to a kind of a sister company or related company where Evergrande kind of act as a guarantor for this OPEC bond. All right, so this OPEC bond is only made known to public when their kind of a holders starts to make a bit of noise towards towards social media. They start to say that, hey, there is upcoming bond, and my creditors hasn't been actually making seem to be making payment. So only these noises starts to be heard, right, then the marketplace will start to notice about this web of OPEC bond that is residing in Evergrande books, which is actually not reported. So that's a pretty big risk that we're going to take note of. So talking about Nikkei 225, so Nikkei 225 indeed it actually did that pullback as expected. It was a worst performer last week, negative 4.8%. But later I'll share you Nikkei 225 has really rested now at a very key support level. Right, very interesting. So it could be an inflection point where there could be a potential bullish reversal that may take shape. Okay, later I'll share with you all the technical configuration of the K225. So it differences if compared to the prior 4 week is the worst difference, negative 7.2%. But what's interesting over here is that today, yes, this was last week performance. So as you know that Nikkei, the Japan market closed at 2:30 p.m. Singapore time. So today's performance was also weak as well. Or if I know it's the weakest among the major Asia Pac index, except for the definitely taking into account of Hang Seng Index as well. For today, it was pretty much weak, and as well Hang Seng Tech. So, but what's interesting is that the share price of the Nikkei 225 has actually floated down, or what I call plunged down to a very interesting support level that we should be taking off. Later I'll share with you on the chart. Then for the German DAX index, also doing that corrective decline as expected, negative 2.42% last week. And it's compared to its prior 4 week average, is actually at negative 9 point, part of it, a negative 1.91%. So what we could see right now in terms of raw momentum, all the major stock indices are actually doing kind of corrective pullback. Okay, so this corrective pullback, it's very similar to the pullback that we see somewhere around in September, September to October last year. Okay, so I do not foresee it in terms of probability. Now is the start of a severe, we call it a correction that that could actually accumulate to 40%, negative 40%, to actually retrace this 13 year of a bullish circular trend that was started in 2009. Okay, so I do not see that coming into the picture yet. Okay, based on the technical analysis. All right, so good. So before we go into the chart, right, let's take a look at the sectors. So we could see that a sea of red for last week S&P 500 sectors. So definitely what has been pretty much exciting or positive will be the energy. So those who followed my tweet, right, I actually tweeted this almost every day. Why energy is actually being pull up against the rest of the pack is due to higher oil prices. And why higher oil prices is going up is actually being supported by higher net gas. Okay, so all these are actually tweet all in my tweet. So that I'll share with you how to actually find my Twitter handle. So you can actually keep up to breast about the latest ongoing in the markets and how does it impact the rest of the major asset classes. All right, so we start to see a sea of red. Okay, then with the one that's leading will be the energy. Okay, so that's the outlayer, but energy itself inside the S&P only consists a very small percentage, less than 10%. Okay, less than 10%. Okay, so even though if energy keep on going, continue to go up in the next couple of weeks, potentially due to higher oil prices, Well, it may not be actually able to lead S&P up much higher, if given that the higher weightage, like the information technology, is still underwater or still under pressure. Okay, okay, good. Now let's take a quick look or deep dive into the technical chart that I'll share with you all. Okay, let's start with the S&P first. Okay, so first S&P 500. So you know that S&P 500 has started to shape this pullback since its all-time high about 4540/50 that was printed on the first week of September. So far it has really declined. If I were to share with you all the performance decline with all-time high to last Friday's low 6%, negative 6%, which is kind of pretty much similar with the previous decline that I mentioned that was seen over here at this point in time. Okay, from September last year to October last year. All right. So what I'm actually expecting is kind of shaping similar this kind of corrective move. All right. Before potentially we could see another up leg to actually take the S&P much higher. Okay. So right now, right. Okay. Those who can actually how high can it go? Or what are the potential key levels? Take a look at my Q4 outlook. Okay. Share with you, that is the higher level to look. That is the next higher level above 4630. So bear in mind that we are now coming very close to a juncture of key support level 4230/4140. So definitely what is that? The 200-day moving average. Graphically, right, if I were to draw the Fibo retracement from the wave 2 to the end of wave 3, so this is your typical 23.6%. Okay, the minimum of that wave 4 target. That slightly below will be your this 200-day moving average at 4140, which is coincide with the swing low of 18th of June previously. So this is a bunch of key levels over here that potentially where I want to see some kind of bullish reversal candlestick form on the weekly as well as potentially on the weekly and daily, where we could actually start to see another potential up leg of bullish impulsive up move to take the S&P much higher to potentially all-time high. So until us that could, this is something that the what you call it, my playbook that I have in mind in the next 1 to 2 weeks. Okay. So for now, right, the next question is for this week, right? This week's strategy, since S&P already declined, right? So how much more can it go down? Is it from here it can just to rally, or is there further more down leg more? So this is the next question we got to ask ourselves. All right. So if you look at the RSI, the forward RSI is neither here or there. It's not really back at the oversold level. So in indicating to us, right, the medium term downside momentum potentially could still lingering around. Okay, in the markets. That means, i.e., it could translate to lower price action on S&P. So let's look at the 4-hour chart. Okay, so in order to actually kind of a craft out a shorter term strategy, so this is the weekly strategy. I need to use a lower time frame chart, okay, to actually fine tune the levels for us to actually strategize. Okay, so if you look at the 4-hour chart here, so what it did last week was actually took out the low of 20 of SEP. So you know that 20 of SEP, what causes this steep plunge? Okay, if you all could recall, about 2 weeks ago, is due to the Evergrande crisis again. The word Evergrande mentioned again. So this Evergrande crisis starts to be made known to the rest of the world, and where we start to see mini contingent field that start to see sell off in Asia, floating over to US, then floating over to Europe, major stock indices. So last week it actually took out this low, yeah, due to the fear of higher yield, higher US 10-year Treasury yield. Then Friday it did a bit of recovery. Yeah. Okay, so what we could see here, the RSI on the 4-hour is still kind of a trap below this descending resistance. No clear sign of a bullish divergence. Okay, what by bullish divergence is this last lower low, your RSI also showing lower low. Okay, there's no clear bullish divergence at this moment in time. So what we could have over here is last week I have a kind of a more key pivotal medium term resistance to actually say whether the bears has been negated, which is at 45 level. So what I did over here is this week, since it's been floated down, I shifted it to 44.50. So what's 44.50? So 44.50 is actually the 50-day moving average. All right, the 50-day moving average and close to that swing low of 27 of Feb as well. So using 44.50 here as my key medium-term pivotal support level, the key medium-term pivotal resistance, pardon me. So as long as this level is not being surpassed to the upside, all right, so potentially, right, we could see another slide down to kind of test this 42.30. So what's 42.30? So we call that the 23.6% retracement. And if I were to do a feeble extension from the top, that means from the start of this corrective decline. Okay, oops. Let me remove this. Let me do it again. Okay, it's come close to one time as well. One time of the this down leg. Okay, measure from the this squeeze up. Okay, this squeeze up rally. Okay, so one time from this projected down leg for this squeeze up. So it lines also confluence at 42.30. So pretty interesting of the 42.30 level. So what it means, it tells us that this 42.30 is a significant inflection point where potentially we may start to see, it's a support level where potentially we may see a recovery if we actually based on the Elliott wave of the end, potential end of the corrective wave 4. Okay, so I'll be definitely be watching closely at this 42.30 level as price actually hit towards potentially towards the down towards this level in this coming week or weeks. Okay, so definitely if we have a daily close above 45.30, that means all bearish bets are off. So you will actually invalidate the bearish move where we will start to see the start of this new impulsive uplift to take us much higher to 45, then to retest 45.40 as well. Okay, then after 45.40, the next level will be 46.30. All right. So now moving on to the Nasdaq 100. So if you look at the Nasdaq 100 as well, also below the 50-day moving average, now acting as a resistance at 15.14. So the next key level to watch will definitely be 14.48 level, okay, which is over here. So what's 14.48? So if I were to draw the retracement from the end of wave 2, okay, push up here. Okay, so you notice that it's also 23.6% as well. All right, delete this. Okay, so there also confluence with this major ascending trend line that is in place since 23rd September low and coming very close to the 200-day moving average. So if you look at the RSI, so RSI nothing great deal. This one is coming pretty much close to this oversold level, but hasn't yet reached the oversold level yet. So perhaps a bit of residual down move more to go to hit that 14.48 level. So now going on the 4-hour chart, what we can see on the 4-hour chart here is the next support level here below 14.48, right? You are slightly below at 14.32. 14.32 over here. So what's 14.32? So 14.32 is actually a cluster of feeble expansion level. Okay, over here. So what we do is over here is that we will tighten the key medium term pivotal resistance for this week to 15,150. So we are looking for kind of a residual down move to end this corrective decline that has started in 5th of September. So it's almost coming close to the end. So we're still looking at a bit of residual down move more, 14.48, then thereafter 14.320. Okay, so if you look at the RSI, not really very clear signs of bullish divergence. There's no clear bullish divergence. Lower low, so this low here and this low here is also lower. It's not so clear of a higher lower to me. So yes, we still can see a potential residual push down for the Nasdaq 100 as long as 15,140 key medium-term pivotal resistance is not surpassed to the upside. So nevertheless, daily close above 15,140. So we will actually invalidate that bearish expectation to start to see a kind of a potential multi-week kickstart of this multi-week impulsive up move to actually retest 15,550, then thereafter the current all-time high swing level at 15,700 in first step. Okay, now next to Hong Kong. So Hong Kong 50 is actually open today despite the closure of the China national holiday. So in said only the northbound and southbound trading is actually shut until Friday. So because of the Chinese national holidays, they will actually close all the way. The Chinese market will close until this coming Thursday. Okay, so no change. Last week we returned neutral between 24,750 and 23,500. So it's still stuck within this range. Okay, still stuck within this range. So why is this level important? Okay, 23,500 is a slight excess because based on this descending whatever channel and this Fibo projection. So it's actually 23,500, right? To recap, right, it's very close to this line here, this ascending long-term ascending trend line that is in place since the great financial crisis low. Right. October 2008. Okay, that is kind of a tested one time, two time. In fact, now it's retesting again today, the third test. So definitely we will keep a bit of excess slightly below at 23,500. Uh, Stay neutral between these two levels, okay, due to unclear elements at this point in time. Okay, 24,750 and 23,500. Okay, to be range bound between these two levels. Okay, so now where the next one should be. The next one is your Nikkei 225 or the Japan 225. We call it in our platform. So like highlight, like I say earlier on my start presentation is that the decline, which is of the Japan or Nikkei 225, has plummeted to a very key inflection level. Okay, why this inflection level is key? Take a look at this. All right. So where we are. So this was the 14th of September high, which is it retest the is 13,800. It retest the 16th February high. Then after it just did that expected pullback, right? So this pullback, right, is now testing or retesting this range, this former range resistance that was broken out on the 3rd of September. It retest back again. So this is kind of a pullback support level, 28,200 slash 28,000. Okay, so if I draw the Fibo retracement of this last steep move up, it's close to 61.8%. Okay, close to 0.8%. Also, what's interesting over here, oops, let me do this. Okay, what's interesting over here is the RSI is coming very close to the support level. Okay, the descending support, the ascending key support level that managed to link up the lows, the oversold level on 6th of March, 12th of July, and right now coming very close to it. Okay, so what it means that over here, this price move here may start to see a kind of a potential reversal since it's actually testing a very key inflection level, all right, or support level. Okay, so let's go to the strategy chart. So strategy chart, what we have over here is I'll use 2800 as my key Fibo level, the lower boundary of the support because it's so confluence with a cluster of Fibo expansion as well. 28,000. So as long as 28,000 key medium pivotal support holds, I'm expecting a bounce, a bounce gain. I don't expect a kind of a very big reversal first. We take out one step at a time until this resistance is being broken up to the upside. Okay, and bear in mind over here, why this resistance is key because of the congestion level over here, 29,450, the last swing high of this morning plunge that led to this morning plunge of 29,190. And also, if I have to draw a descending trend line that linking the lower highs, okay, the previous two lower highs, if you look at over here, it should be pretty much closer at the price oscillate. Okay, so still below this descending resistance. So what we could do over here is we take step one step at a time. One thing positive is the short-term momentum has started to shape this bullish divergence. Very clear. Lower low, higher low. Okay, and right at the oversold level as well. So what's indicating that this kind of short-term decline that we start to see is being overstretched, where at least we could play a mean reversion rebound, potential mean reversion, which we could see, pardon me, which could see a potential mean reversion rebound. Okay, as long as 28,000 holds, it's not taken down, potential bounce up to 29,190 slash 29,450. Okay, so however, a daily close below this level, all bets are off. So we will start to go down back towards the long-term key support zone of 27,500, pardon me, and 26,880. All right, so now very quickly to the German DAX, the last one, the German 40 index. So bear in mind that German 40 index, right? Last week, we actually has a kind of a first level of support, which is around this 15,000 15,500 level, very close. Okay, so what we could see over here is that it tested and it managed to stall slightly here. It did a bouncer on last Friday. So where it bounced, right, it actually bounces off the 200-day moving average. All right, 200-day moving average. And the next support level that we have, the second support level is 14,800 slash 750. Okay, so let's go to the 4-hour chart. So if you look at the daily RSI, right, daily RSI seems to be still evolving in a kind of a bearish configuration, still turning point downwards. Okay, still a bit of room more to go before hitting this key support level of 21 and 20%. Okay, for what you highlight over here. Okay, so now go to the 4-hour chart. Okay, so if we could see on the 4-hour chart here, right, what we could potentially see is we're coming very close to this pivot level. Okay, which is this level. 14,800 slash 14,750. Very close to this level. So what we could see over here is that potentially it could maybe just do a little bit of residual push down first, a bit of residual push down towards this 14,750 key medium pivotal support before we start to see a recovery or a potential, at least a mean reversion bounce first to test the intermediate resistance at 15,450. Okay, this is the 4-hour chart. All right. This swing high here, 15,450. And if I do the Fibo retracement, okay, it's so confluence, taking from the start of this corrective decline to last Friday low, okay, very closely to the 38.2% as well. All right. Okay, so this is the level, the first resistance level to watch if there's any sign of a potential rebound, okay, over here. Okay, so now definitely if we start to see a daily close below this 14,750, right? That means a close below this 14,750, then we could see another, we call it extension of this corrective decline that is in shape since 30th of August to actually set sign on the next support at 14,100, which is a psychological level, 14,100, and as well as a cluster of Fibo expansion level. All right. So yeah, so this is a kind of a sum up for this week's strategy. So we could see this week's strategy over here is that that particular corrective decline, right, that is in place since we're talking about a month ago plus ago from the depending on August or September high. Okay, if you look at it from the German 40s August high, yeah. So we are coming very close to some key inflection level where we could start to see kind of a potential recovery in play. Okay, so a bit of residual push down more on the S&P 500 and the Nasdaq 100. We are still bearish on that because I hit the level. Support level that has already been met is the Nikkei 225, okay, which is okay, which I highlighted earlier on. A bit more to go will be on the German DAX index, okay, which is the German 40 index, which is at 14,750. Okay, so we're talking about we're only playing two kind of tactical mean reversion rebound, or we call it a short-term recovery play on the German 30 and as well as the German 40, pardon me, German 40 and the Nikkei 225. Okay, so with that, do take care, and I see you again in my next video.